Mutual funds allow investors to pool money together, but they are not risk-free. Let us look at what you should know before investing. Every investment involves some level of risk. With mutual funds, that risk is tied to the underlying assets held within the fund's portfolio. Because funds hold many different assets, your returns are tied directly to the performance of the entire market segment they track. These are the three most common risks. Market risk affects everyone, while manager risk depends on the specific person running the fund. Active funds carry the added risk of underperforming the market, while index funds generally track the market's average performance exactly. Different types of funds have different levels of volatility. Stock funds typically experience wider price swings than bond-focused funds. While holding many stocks reduces the risk of one company failing, it does not protect you if the entire economy hits a downturn. Always read a fund's prospectus to understand its specific risks and fees. Thanks for watching, and see you next time.